European banking stocks have risen at the start of today's trade on this Thursday, the 16th of March, after the Swiss National Bank stepped in late last night to try and stave off a crisis at Credit Suisse. Let's take a look at the statement that we saw released yesterday. The Swiss regulator FINMA last night said the Swiss National Bank insisted that there were no indications of a direct risk of contagion for Swiss institutions due to the current turmoil in the US banking market. The Swiss central bank said it will provide this liquidity backstop. We learned overnight that Credit Suisse will borrow up to 50 billion Swiss francs. Credit Suisse executives held talks with representatives from the SNB and FINMA throughout yesterday's session. If we have a look at what happened, and indeed what has happened this morning, this is Credit Suisse stock. The long-term picture, you can see the big loss of market capitalization and record lows yesterday. And today we've got the stock opening up 23.8%. And this has given a little bit of a fillip to other stocks around the region. Yesterday's losses were around about a third of the total value of the business. So that puts today's move into some sort of context. But the significance, I think, here is that we are already off the highs today. We're 20 minutes into the European trading day. But I think if you look at other areas of the markets, it's interesting to see what's been happening there as well. Big losses yesterday for the FTSE 350 banking sector. Today, we do have a rise. Now, this is a red candle because there was a gap up. We're still 2% up from the lows at the closing point we saw yesterday, which was at the 200-day moving average. So I think what's going on here is the fact that the markets appreciate what the Swiss National Bank has done, the fact they've provided this backstop. But I think in the longer term picture, we need evidence to suggest that there is not going to be a systemic risk that the banking sector is facing. And I think we're far away from that point at which investors believe that we're over the worst. I think possibly there could well still be the worst to come, and people ought to be vigilant to the potential downsides, not just for banking stocks, but for the entire global market.